people. Yes. So far we have discussed about cost bookkeeping in that unit 1, that is relating to non-integrated accounts, right? So today we are going to look at second unit, that is nothing but reconciliation of costing and financial profits. Okay. Yes. So first question arises over here. Sir, what do you mean by reconciliation? Right? What do you mean by reconciliation is the first question what arises over here. Sir, we have heard it somewhere, sir. Reconciliation. We have heard it somewhere, but where we forgot. Nice. So, reconciliation, people, you heard it in the bank reconciliation statement in your accounts, right? Chalo. Let's assume you people don't remember anything. Sir, no need to assume, sir, we don't remember anything. Okay. So, see, reconciliation means, whatever reconciliation it is, reconciliation means there will be 2 points and there will be a difference between those 2 points. In reconciliation, what we will do, we will identify what are the causes for those difference between those 2 points and we try to eliminate those causes. That is nothing but reconciliation. Sir, can you repeat? Yes. There will be 2 points. In between 2 points, there will be certain differences. In reconciliation, what we will do, we will find out what are the causes, what are the reasons for those differences, and we try to eliminate those differences. Okay. So, in reconciliation of costing and financial profit, sir, in reconciliation of costing and financial profit, what we are looking at, right? See, in this, the name itself says a reconciliation of costing and financial profits. Reconciliation of costing and financial profits. Here we are trying to find out the difference between, or we are trying to find out the cause of the difference between costing profit and financing profit. I repeat, we are trying to find out the difference between costing profit and financial profit. Now the question comes, sir, what do you mean by costing profit? What do you mean by financial profit? Very simple, guys. Profit which we arrived at, that is profit which we determined, profit which we computed using the cost books is called as costing profit. Profit as per books of accounts is nothing but financial profit. One, costing as per cost books is costing profit, or profit as per cost book is costing profit, whereas profit as per books of accounts, it is financial profit. Yes, sir. All good. Now, sir, why the difference arises? When the difference arises, always remember, when you maintain your cost records in the non-integrated format, when you maintain your cost records in the non-integrated accounts, then there might be a differences. Sir, what do you mean by non-integrated, sir? Non-integrated means costing के लिए we are keeping separate books, pure financial items separate books, right? Costing separate books, pure financial items separate books. Okay, sir. Done. Non-integrated we saw in the unit number 1. Okay, done. So, sir, okay, we agreed. Reconciliation of costing and financial profit means we are trying to identify the causes for the difference between the costing profit and financial profit. Can you tell us what are the different causes it could be? What are the different causes? Can be. Is it a exhaustive list, sir? Need not be. There might be other items also, but we are going to look at the major item, which are the major causes. If any additional things comes in the question, then we will see there. Okay. So, what are those, sir? First one is dividends paid. Listen here, guys. Dividends paid is nothing but a pure financial item. Right? Dividend paid is nothing but a pure financial item. Have you took it in the cost sheet? The answer is of course no. You didn't take it as an expense. Okay, sir. Didn't take it as an expense. But in the books, we have taken. So what you should do, sir? Moral of the story is very simple. Dividends paid, it will be recorded only in the financial accounts but not in the cost accounts. Dividends paid recorded only in the financial accounts but not in the cost accounts. So this is one of the cause for the difference. Sir, how to reconcile it, sir? That I will explain. For the time being, you should understand what do you mean by reconciliation? What are the causes for the reconciliation? As per that first cause we saw, hope it is clear. That is dividend paid. Because dividend paid is a pure financial item that has no implication on our cost sheet or accounts records as per cost, which is basically non-integrated accounts. Okay, sir. Next one. Appropriation of funds and reserves. We'll transfer to capital redemption reserve so much, general reserve so much, dividend so much. That is nothing but appropriation. Charge means what, sir? Charge against profit means what, sir? Charge against profit means whether you have a profit or you don't have a profit, you should pay those expenses. Those are charge against profit. Appropriation of profit means if you have a profit, out of that profit, how you distribute that profit. That is known as appropriation of profit. Yes, sir. Fine. So, again, appropriation of profit. That appropriation, have you seen in the cost records? Doing the general reserve, capital redemption reserve, securities premium? No, we haven't seen. It will be there only in the financial accounts. So this is one more cause. It will be there in the financial accounts. It won't be there in the cost account. Of course, the difference arises. Yes, sir. Done. Next is what, sir? Taxes on income and profit. Listen here, guys. There are two kind of taxes. Direct tax, indirect tax. Indirect tax are what, sir? Tax which we pay when we purchase, when we sell, etc., etc. So when we purchase and when we sell, indirect tax we would have paid, that we already considered while calculating the cost of material, if you remember, right? So moral of the story, as per the cost records, we will consider the indirect taxes, but not the direct taxes. Direct taxes will be computed as per the tax profit. Tax profit will be computed as per the books of accounts. Moral of the story, income tax won't be recorded in the cost records or a cost accounting system in the non-integrated form. So of course, as it's only recorded in the financial accounts, we are going to do something for that, because that is one of the reason why my cost accounting and financial accounting is not matching. Okay, sir. Next, creation of provision. Sir, what do you mean by provision, sir? Very simple. You have incurred expenditure, but how much you don't know. You have incurred expenditure, but how much you don't know. So you should create a liability. The answer is of course yes, sir. Of course yes. But how much do you know? The answer is don't know. That time what you will do, you will estimate some amount based on the occurrence, right? Using the substantial degree of reliability, we are going to identify how much amount I should keep it aside as my liability. Because I incurred expenditure, the answer is yes. Don't you think I should pay? Of course you should pay, sir. If you don't pay, what happens? Nothing. They will come and hit you. That's it. Not hit and all, but yeah, court case. For example, current bill, sir. Electricity bill. April month ka electricity bill or March month ka electricity bill. When it will come, sir? It will come in the April. So, sir, when we close the books of accounts in the month of March, shouldn't we consider it as an expense? Of course we consider it as an expense. Sir, but bill is coming on 15th April now, sir. What to do? Pretty simple. You should estimate how much it could be. Of course, you will be having the current bill. There they will show how much unit was last read. You should check on 31st March how much units is consumed. Difference between those is units consumed during the period, and the slab will be there from so much to so much units, so much to so much units, so much, like that. Rates will be there that you multiply, you will be able to find out how much is your electricity bill. Okay. Now don't tell. Sir, free, sir, free. For business and all, there is no free. Okay. So, creation of provision, this thing only happens in the financial accounts but not in the cost accounts. Provision things and all only coming in the financial accounts but not in the cost accounts. Certain writing off will be there, no? Bad debt writing off, etc., etc. That writing off also will happen only in the financial accounts but not in the cost accounts. Next is donation. Sir, donation we have seen in cost sheet. The answer is of course no. Where you will show donation? Can you show donation? Can you add it to the cost of production? Is it directly or somewhat indirectly relating to the factory? The answer is no, sir. Can you add it to the administration? Without donation, you can't run your administration only. The answer is no. Sir, can you add it to the selling and distribution, sir? The answer is of course no. So this donation is other expenses. This won't come in the cost books, sir, but it will be cash outflow. Cash outflow means expense. Expense means it should be there in the financial accounts. So it will be there in the financial accounts. So this is one more reason for the difference between financial accounting and cost accounting profits. Okay. Loss or profit on investment, sir. You remember profit on sale of investment we used to credit in the P&L. Loss on sale of investment we used to debit in the P&L, accounting P&L. Did we do anything in the cost books? The answer is of course no, sir, because investment is not a costing activity. So what you should do, sir, this will only be there in the financial accounts, not in the cost accounts. So this is also one more reason for the difference between cost records and the financial profit. Okay. Interest income and expenses, sir. Sir, this investment itself is not relating to cost accounting. When the investment itself is not relating to cost accounting, I mean investment in the other than the machine and all, because investment in machine and all, the depreciation will be taken in costing also. But yeah, other than machine and all, that your FD, shares, debentures, etc. will invest, no, those things. Those are pure financial items. So whatever return you will get from that, that is also your pure financial item. You can't show it as sale of material. It will be an interest income. So all those things also won't be forming part of your cost accounting. So it will also be only recorded in the financial accounting, sir. Okay. Sir, transfer fees. What do you mean by transfer fees, sir? Transfer fees means, for example, let's say I am holding shares of ABC Limited. I sold it to you. Now you should pay to the company certain money to change the name of the shareholder. Otherwise, company will end up paying a dividend to me only, no? So as the company end up paying dividend only to me, what I should do, sir? What you should do, sir? Or based on our agreement, if it's me, I should do. If it's you, you should do. What you should do? Put an application to the company asking that boss, please change the name of the shareholder. Okay. Company will do it for free. The answer is of course no. They will charge certain things, no. So that is nothing but a transfer fees. This also not at all related to the cost accounting. So it will only be recorded in the financial accounting. Yes, sir. Now my question now. Rent paid or rent lost. For example, we have one factory. If we have given it for a rent, if we have let it out, we would have ended up making 2 lakh rupees per month. We ended up doing 2 lakh rupees per month. What I told, we have one building. If we have rented it out, we would have ended up making 2 lakh rupees per month. Now, because of we using it for our business, we can't let it out. The answer is of course yes, sir. So now my question is, that is notional cost. The answer is yes, sir, notional expense. So in financial accounting, whether we record actual expense or notional expense, in financial accounting we ignore the notional expenses. We record only actual expenses. So notional expenses will be treated as expense only in the cost accounting, but not in the financial accounting. Sir, cost accounting integrated or non-integrated? Of course non-integrated. If it is integrated, then financial items also will be there, cost items also will be there. Then no need to reconcile only. The profit itself will match. But in case of non-integrated, it won't match. Because pure financial items and all we ignored. I told it already. Already we discussed about 10 points. Which and all, sir? Dividend, appropriation, taxes, which taxes are direct taxes. Provisions, writing off of balances, donations, loss or profit on sale of investments, interest income, transfer fees, notional expense. Sir, payment of indirect expenses. Here you should be very careful. Here you should be very careful. Why, sir? Listen here, everyone. Listen here, everyone. Hope you remember. We discussed something called as absorption. There is nothing but charging the overhead for the period, right? Charging the overhead for a period, or also you can call it as recovery rate. Because boss, that will not be added in the direct expenses, but we have incurred to produce the product, so we should recover. Yes, sir. How we will recover, sir? How we will recover? The process is called as absorption. The process of recovering the overhead expenses from the units produced is a absorption. As I already told. How you do recover, sir? Very simple. We will be having predetermined rate. We will be having predetermined rate. How we arrive at predetermined rate, sir? On the basis of budgeted cost, right? On the basis of budgeted numbers, I will arrive at predetermined rate. For example, let's say there is one indirect expense of 2 lakh rupees. We are assuming that during the period we will end up producing 20,000 units. So predetermined rate is rupees 20. Predetermined rate is rupees 20. I ended up paying rupees 190,000. They have given me some discount and all. So I ended up paying 190,000 actually as my expenditure. Now my question is, in the books, will you record 2 lakh or will you record 1,90,000? The answer is, in the books of accounts, you will record 1,90,000, sir. Because in the financial account, we don't record the absorption and all. We record how much is actually incurred. Sir, how much is paid? The answer is no. How much is actually incurred? What is the reason, sir? Accrual concept. Okay. So, we incurred 1,90,000. We incurred 1,90,000. But in costing, whether we take the actual or what, sir? We take the absorption. We take the absorption. Let's say during the period, I produced 21,000 units, sir. Nice, no? Or let's say 20,000 only. We'll keep it simple. I produced 20,000 units only. I have already predetermined rate of rupees 20. Sorry, 10. It should be 10. I already have a predetermined rate of rupees 10. So it comes to rupees 2 lakh. It comes to rupees 2 lakh. So what is happening, sir, here? What is happening? Actual expenditure is 190. Actual expenditure is 190. But I am recovering 2 lakh. I am showing my expense as 2 lakh. Which means over recovery or under recovery, sir? Over recovery. Over recovery. This is also known as over absorption. Over recovery. This is also known as over absorption, sir. So now my question is, in my financial accounts, I showed my expense as 190,000. The answer is of course yes, sir. But in my cost accounting, I showed my expense as 2 lakh, which means I recovered more. I showed my expense more in cost records, because of which in cost records profit has reduced, because I showed more expense compared to financial accounts. Yes, sir. Now let's say reverse case. What reverse case, sir? Every assumption remains same except sir, we thought we are going to produce 20,000 units, sir. Okay. But the thing is, our employees are too lazy. They produced only 15,000 units, sir. Wow. Nice. Now, these 15,000 units, say how much I will recover? 15,000 into rupees 10, which will come to 1,50,000. But did I incur the expenditure more than this? The answer is yes. Why, sir? How much I actually incurred? I incurred. Let's say take it as rent only. Can you reduce the rent telling that I produced less? The answer is no. So I ended up paying 190. But as per cost records, I took only 150. In cost records, I took only 150, right? 150,000, sir. So what is the moral of the story, sir? Actual 190, recovered 150. This thing we call it as under recovery. or you can call it as not undertaker, under absorption. Okay. It is called as under absorption. Okay, sir. So see here very carefully. Payment of indirect expenses, guys. In accounting, expenses will be recorded at actual expenses incurred. So in accounting books, we record it as a actual expense incurred. However, in costing, sometime expenses will be recorded at a absorption basis, that you have seen in the overheads chapter. So these are the certain reasons. I have given one more example. Please go through this. See, machine operating cost, actual 100 hours we operated, paid 1 lakh rupees. In financial accounting, I record it as a 1 lakh rupees only. The answer is yes, sir. Let's say absorption rate is just rupees 950 per hour. Absorption rate is rupees 950 per hour. So in cost accounting records, operating cost, how much I will record? 100 hours I utilized, into 950 I recover, which will come to 95,000. 95,000. Actually I incurred 1 lakh, sir. I recovered 95,000, sir. Under recovery, sir. So due to the usage of absorption method, there will be a difference of 5,000 in the profit. So these are the certain causes why the difference will come between the financial accounting and the cost accounting. Okay. See, sir, how to do the reconciliation? Very simple point. Oh, very simple. What is that? Very simple, sir. Can you tell how simple it is? Yes, I can tell. How simple, sir? Very simple. Let's say you are at point A. You are at point A. There is something point B. So point A, there is point B. Point A and point B. Listen, there is a difference. There is a difference. So what we should do in reconciliation is very simple. We should, from point A, we should arrive at a balance of point B. From point A, we should arrive at a balance of point B. How to arrive at that, sir? Very simple. We should see what point B has done. We should see what point B has done. Same we should follow. Then we end up reaching where the B went. Right? Where the B went. For example, there is one focal point over here. Here is B. Here is A. Here is B. Here is A. Now, instead of going this side, A went this side. Now what A should do? First A should come back to the middle point. Then we should take the step whatever is taken by B. So here also we are going to do the same thing. What we are going to do, sir, in reconciliation? Very simple. You can start with the cost accounting profit or financial accounting profit. Starting point. Starting point can be cost accounting profit or financial accounting profit. Okay. It can be a cost accounting profit or a financial accounting profit. If we start at a cost accounting profit, after reconciliation, we should end at financial accounting profit. If we start at a financial accounting profit, we should end at cost accounting profit. I repeat, if we start at cost accounting profit, we should end at financial accounting profit. If we start at financial accounting profit, we should end at cost accounting profit. Okay, sir. Done. So how to go, sir? Very simple. In cost accounting profit, while arriving at cost accounting profit, we would have taken certain incomes. We would have taken certain incomes or profits which is not there in the financial accounting profits, sir. Yes, sir. In cost accounting, we took certain profits which is not there in the financial accounting. Here, who is a God now? God is financial accounting, because we are trying to reach the financial accounting point. Starting from the cost accounting point, we are trying to reach the financial accounting point. So whatever God has done, we also have to do. Whatever jatra we did, we should eliminate. What do you mean by that, sir? Very simple. Listen, financial accounting. for example, in cost accounting profit, we took around 10,000 as a one income. In financial accounting profit, in cost accounting profit, we took 10,000 as one income. In financial accounting profit, that is 0. We didn't take any income only. That income we excluded. We didn't take in financial accounting profit. So whatever has God done, we should do. Yes, sir. What we should do? Whether God has taken 10,000, financial accounting people has taken 10,000. The answer is no. If they haven't taken, don't you think we should reverse what we have taken? Yes, sir. So what you should do, sir, from profit we should reduce or increase? Of course reduce, boss, because you already added it to the profit. Now reduce it from the profit. So less incomes recorded only in cost accounts. Okay, sir. Sir, certain incomes are recorded in the financial accounts, sir, but not recorded in the cost accounts, sir. Certain items are recorded in the financial. This is financial, right hand, left hand is cost. Sir, certain items are recorded only in the financial, sir, income, not recorded in cost. Whenever we record in finance profit has increased. Now finance profit is a God, so in cost also we should take that. So we will add incomes recorded only in financial accounts. Incomes recorded only in financial account we should add, because financial account may they added, we are trying to reach the point of financial accounts. In our cost accounts it is not added, so we'll add it. Okay. Certain expenses, sir, we showed. Financial accounts it not showed. Certain expenses in cost accounting it showed. Financial accounting it is not. Let's say financial accounting, cost accounting, left is cost, right is finance. Whenever we showed expense in cost accounting, expense fell, sir. The answer is, profit fell, sir. The answer is yes. Financial profit fell. The answer is of course no. Why, sir? Because in financial accounting, we didn't consider that expense only. So what we should do, sir? Whether should I reduce the financial profit? The answer is no. We are trying to reach the financial profit. So whatever they have done, we should do the same. What they have done, sir? They have done nothing. So leave it. No, sir, you also do nothing. But you didn't do nothing. You gave a negative impact. You reduced your profit. So add it back and make sure you also do nothing. So add expenses recorded only in cost accounting. Sir, so our actual expense was 1 lakh, sir. Yes. Absorption was 120,000, sir. Yes. 20,000 extra expense we showed. The answer is of course yes. Sir, should we add it back or reduce? Of course, you showed more expense than financial account. Add it back, boss. Add over absorption. Add over absorption. Okay, sir. Done. Now, certain pure financial expenses like dividend, these things and all, interest payment and all, will be there only in financial account, sir? The answer is of course yes, sir. The answer is of course yes. So, sir, while arriving at financial profit, it is reduced. The answer is yes. Sir, can I add it back? The answer is no. Why, sir? Because financial accounting is God. You can't move the God. So what you should do? You should only reduce. So, minus from profit, you are going to eliminate those expenses. Expenses recorded only in financial accounts. Expenses recorded only in financial accounts. Sir, actual expense is 1 lakh, sir. Absorption is 80,000, sir. In cost accounting, 80,000 is an expense. In financial accounting, 1 lakh is an expense. The answer is yes. Now, what to do, sir? This 20,000 is under absorption, which means we are showing less expense compared to our financial accounts. So what we should do, sir? Very simple. Boss, you should show more expense. Show more expense means minus under absorption. You should reduce it from the profit because you have to show the more expense. we end up getting a profit as per financial books. We end up getting a profit as per financial books. Ishtena? Ishte. We deliver in 10 minutes. Okay. So, what do you mean by reconciliation we saw? How to do the reconciliation also we saw. When we take the cost accounting profit as a starting point, we try to get the profit as per finance. So whatever they have done, we will do. Whatever they haven't done, we will reverse. Sir, can you repeat? Can you repeat? Yes, I will repeat. Whatever they have done, we will do. Whatever we have done, they haven't done, we will reverse. Whatever we both did in the same manner, no need to reverse. Yes, sir. Done. Understood. Sir, but what if my starting point is financial profit, sir? Profit as per financial books. Sir, what if it is the case? Then you should try to arrive at a profit as per cost. Basically, you are going to show them what is the difference or what is the reason for such difference, right? Difference is there. What is the reason for that? That we are going to show to our users in a statement telling that these are the reasons. Okay. Now, our starting point is profit as per financial books. So now which is God, sir? Cost book is God's. Cost book is God. Okay. What you should do, sir? Very simple. Whatever we have done in our cost books, that should be done in the finance book if it is not done. Whatever is not done in the cost books but we have done in the financial books, that should be reversed. Okay, sir. Can you tell how it is? Yes. There will be certain expenditures or losses which is recorded only in financial books. The answer is yes, sir. The answer is yes. So, what you should do, sir? Very simple, people. Very simple. Certain expenditure you recorded only in financial account but not in the cost accounts. So, cost account profit will be same. But financial account profit, as you book the more expenditure, it would have reduced. So, add back those things to the profit. What is that, sir? Expense only in financial accounts. Expense only in financial account, I should add back. Okay, sir. Done. Sir, under absorption, over absorption, what you should do, sir? Very simple. In my financial accounts, I took 1 lakh as an expense, actual expense. In my cost account, let's say I took 120,000. Now, this 20,000 is what, sir? Over absorption, sir. Of course, yes, over absorption. Whether in cost account I showed 120 or 1 lakh. The answer, of course, is 120, sir. Because of that, my cost profit reduced by 20,000. Yes. In your financial books, how much you showed? You showed it as 1 lakh. Because of which your profit is excess by 20,000. The answer is yes. We are trying to arrive at a cost profit. So to arrive at a cost profit, what you should do with the 20,000, sir? We should reduce the profit. That is less over absorption. Less over absorption. Done, sir. Done. Sir, what if it's under absorption, sir? In the costing, we recorded an expense as 80,000, sir. In the financial, we recorded it as 1 lakh, sir. In financial, you showed 1 lakh expense, because of which 20,000 compared to costing is less. The answer is yes. Add back. That is add under absorption. Sir, in question, if they give both the profit, what we should do? Start from the cost profit. Your call. Whatever you want to do, you can do. But usually we will start from the cost profit, end up getting a finance profit. But in the question, they give finance profit, but they ask you to calculate the cost profit, sir. Then starting point is finance profit, and we should do this method. We will end up getting how much is the cost profit. Okay, sir. Done. So, sir, certain expenditures are only recorded in the cost account, sir, but not in the finance accounts. Basically, it should be absorption only, but leave. Let's say certain expenditures are there only recorded in the cost accounting, sir, but not in the financial accounting. What you should do, sir? Cost accounting might recorded. Yes, sir. it reduced the cost profit? The answer is yes. Whether your financial book profit is reduced, the answer is no. What you should do, sir? Reduce. That is minus expenses only in cost accounts. Expenses only in cost accounts. Yes, sir. Done. Done. Sir, certain incomes we recorded in the financial account but not in the cost account. So what to do? Whether cost accounting profit increased? The answer is no, because we didn't record it as income only. Financial accounting profit is increased, sir. Of course, yes, because we showed it as an income. So what to do, sir? We should reduce it from the profit. Minus income only in financial accounts. Income only in financial accounts. Yes, sir. What about the income recorded in cost accounts, sir? Pure cost accounts. Yes, sir. That time what to do? Very simple, people. Very simple. Income recorded in cost accounts. The answer is yes. Because of which cost profit increased. The answer is yes. Now you should increase your book profit also. So I should add income only in cost accounting. I will arrive at cost accounting profit or profit as per cost accounting system. This is the reconciliation. This is the reconciliation. When there is a profit. When there is a profit. Sir, what if there is a loss? Give me a second. We will start. Yes, sir. What if there is a loss? Let's say loss as per cost accounts. Loss as per cost accounts. So from the loss as per cost accounts, we are trying to reach at the loss as per books of accounts. So what you should do, sir? Very simple. Guys, listen. Certain expenditure we considered only in costing. Certain expenditure we considered only in costing. So whether it is increase the loss or decrease the loss. Of course it increased the loss, sir. Because that expense is not recorded in the financial accounts. So their loss is normal only. But here what happened, sir? Cost account we showed more expense. So more the loss, sir. So now what you should do, sir? Reduce the loss. Minus expenses only in cost accounts. Minus expenses only in cost accounts. Yes, sir. Done. Later, sir. Certain expenditures are recorded in the financial accounts but not in the cost accounts. There might be certain expenditures recorded in the financial accounts but not in the cost accounts. Then what we should do, sir? Very simple, people. Very, very simple. We record in the financial accounts, sir. The answer is yes. What? Expenses. Because of that the financial loss decreased, increased. Increased, sir. Cost loss is here only. Increase the loss. So add expenses only in financial accounting. Expenses only in financial accounting. Yes, sir. Sir, there are certain incomes in the cost accounting, sir. It is not there in the financial accounting. What to do, sir? Very simple. You considered income in the cost accounting? The answer is yes. In financial books, not considered. Which means in financial books, loss will be as it is. But in your books, sir, income, loss reduced, add it back. That is incomes only in cost accounting. Yes, sir. Then what, sir? Very simple. Certain incomes are recorded only in a financial accounting like interest received, dividend received and all, but not in the cost accounting. That time what to do, sir? Very simple. One more concept, guys. What is it, sir? You record it in your financial account? The answer is yes. Because of which your financial loss is increased, decreased. Loss decreased. So in your cost books, same it is. So what you should do, sir? Decrease. So minus incomes only in financial account. See, we are talking from the last point of view. Some people teach you like this, sir. What, sir? Only one format you by heart. The first amount you take it as negative. The profit as per cost accounting is there, no? That format only you by heart. Then you take it, all other amounts same. But there, while writing profit as per cost account, you take it as a minus. See, all those things I don't do. Because you can forget you can't forget how you solve, but you can never forget a concept if you understand, right? So understand the concept, then everything will be cakewalk. Why you want to by heart the things? Yes sir, done. Next is what sir? Over absorption sir. Over absorption means what sir? In cost accounting, expense is showed more. Over absorption means what sir? In cost accounting, expense is showed more. Yes sir. More. Yes sir. Chalo. Now, because of which in your cost accounting loss increased, of course, yes sir. So you should reduce the loss now. That is minus over absorption. Minus over absorption. Okay sir. Done. Next is what sir? Very simple people. Very simple. What you should do is, sir, how to treat the under absorption, sir? Under absorption means in financial account the expenses are more, in the cost account expenses are less. Yes, in financial account expenses are more, in cost account expenses are less. The answer is yes sir. So when the expenses are more in financial account, loss is more in financial account. Yes sir, but cost account no changes. So what you should do sir? Add it to the loss, increase your loss. So add under absorption. Add under absorption. What you will end up getting sir? You will end up getting loss as per financial accounts. We end up getting loss as per financial accounts. Sir, what if the starting point is loss as per financial account? Then what you should do sir? You should try to find out loss as per cost accounts. Sir, okay. First sir, expenses only recorded in cost account sir. When expenses is only recorded in cost accounts, what happened to the loss as per the financial books? Nothing has happened. But what about the loss as per the cost accounts? Increased. So here also you should increase. That is add expenses only in cost accounts. Okay sir, done. Next, expenses only in financial accounting sir. There are certain expenses which is recorded only in financial accounting. What we should do sir? Listen. In cost accounting loss increased. The answer is no sir. How it can increase? That is not considered only. But in your financial account increased. Of course sir. So what you should do? Now decrease. That's it. So minus expense only in financial accounts. Okay. Income only in cost account sir. If income only in cost account is there, financial account loss as it is, it will be there. But in the cost account, loss gets decreased. There is some income which is recorded only in cost account, because of which cost loss decreases. So what you should do to financial loss sir? Decrease it. That is minus incomes only in cost accounts. Incomes only in cost accounts. Sir, if there is a income only in the financial account sir, if there is only income only in the financial accounting, then what we should do sir? Very simple people. Very simple. Financial account income you showed, because of which you showed less loss compared to cost. You showed less loss compared to loss as per financial books. What you should do sir? Add it back. Add incomes only in financial accounting. Okay sir, done. Under absorption, over absorption, what you should do sir? Over absorption means you showed more expense in the cost books. Yes sir, we showed more expense in the cost books, because of which your cost loss has been increased. The answer is yes sir. So now here also you increase. That is add over absorption. Add over absorption. Okay sir. Okay, done. Next what sir? You under absorption means your cost expense is less. Under absorption means cost expense is less. When the cost expense is less, cost loss is also less. Yes, sir. So what you should do, sir? Reduce. Minus under absorption. By doing all this drama, you will end up getting a loss as per the cost accounts. That's it. So this is all about the reconciliation, sir. The answer is yes. This is all about reconciliation. Okay, sir. Done. Anything else is left, sir? Small concept is left. What is that, sir? Memorandum reconciliation account. Instead of showing it in a statement, I will show it in the account statement, accounts format. How, sir? Let's say profit is there, so I will take by profit here. Let's say by profit as per cost accounts. So first format, by profit as per cost accounts. So what you should do, sir? All plus is there, no? You should credit because it should get added to the profit. All the minuses are there, no? That you should reduce, which means you should debit. That's it. All the plus here you are going to credit, all the minus you are going to debit. Sir, what if I take the profit as per the financial book, sir? Again, whatever add is there, credit, whatever minus is there, debit. Because profit will be there in credit side, whatever you credit will get added to the profit. Here we are doing the same thing. Whatever you reduce will reduce the profit. Opposite side, because balancing figure will be the profit, no? So opposite side you debit. Loss if you take, start in the debit side of the account. All the increase in the losses, debit. All the decrease in the losses, credit. Only so much, sir. Only so much. Aste na? Aste. Yes. We'll see certain question. Patapat. Yes, sir. We'll see. If you want to take down this quickly, you can take down this. Sure. We'll see. We'll see illustrations now. What to do. The net profit of a manufacturing company. The net profit of the manufacturing company appeared at 64,500 as per financial record as on 31st December. So they are telling financial profit is how much, sir? Financial profit is 64,500. Yes, sir. Done. A careful, okay. Whereas cost book showed profit just 84,460, which means showing more than the book profit. What is the reason, sir? A careful scrutiny of the figure from both the set of accounts revealed so much. They are just asking you to prepare a reconciliation statement. Here starting point you can take anything. Starting point you can take anything, in the sense anything, whichever you are comfortable with. Sir, but you tell, sir, what shall we take? Take a cost profit as the starting point. Take a cost profit as a starting point. Okay. Income tax provided in financial books, sir. So we are starting from the cost point, which means we should end up getting a financial point. Moral of the story, sir, whatever the financial books they have done, we haven't done, please do it. Whatever the cost books we have done, they haven't done, reverse it. I repeat, whatever financial books they have done, we haven't done, do whatever they have done. Whatever we have done in the cost books, they haven't done, reverse it. No need to do it. Done, sir. Income tax provided in the financial books, sir. So in the financial books they provided a income tax, it seems, which means basically expense. Yes, sir. Because of which financial profit decreased, sir. There they reduced it. Now here also you reduce, boss. Okay, done, sir. Done. If I take a cost accounting as a base over here. Okay. Next, sir, works over bank interest credit in the financial books. Credit means income, no? Credit means income. So bank interest credit in the financial books, sir. What we should do? What we should do? Very simple, people. Very simple. There you showed as a income. The answer is yes. Because of which you showed more profit. The answer is yes. When you showed a more profit not showed in the cash book, what you should do, sir? Show the profit in the cash book also. So add it as a income. Income, increase in the income will increase the profit. So I have to increase my profit. Okay, sir. Work overhead under recovered. Work overhead under recovered. Under recovery. Under absorption. Sir, in financial accounting, some expense is there. Let's say 1 lakh rupees. But in our books, it is lesser. So what you should do, sir? There they showed more expense. You also show the more expense. If you show the more expense, whether your profit will decrease, increase. Your profit should decrease. So under absorption, I am going to minus. I am going to minus. Done, sir. Next. Depreciation charged in the financial records 5,600. Depreciation recovered in cost is 6,000. So in financial account 6,000 is depreciation. In cost 6,000 is 5,600 and 6,000. Which means in financial record expense showed is less. In financial record expense showed is less. Here we showed more, sir. What you should do, sir? You should reduce your expense. Sir, to reduce the expense, what you should do? I mean, when you reduce the expense, what happens to the profit? Profits get added. So add how much, sir? Full amount. The answer is just 400. Because you have taken 6,000, they have taken 5,600. So their profit is 400 more compared to yours. Now you should increase your profit by 400. So add 400. Yes, sir. Next. Administrative overheads over recovered. Sir, there is some administrative overhead, sir. Over recovery, sir. Over recovery means in your cost you have showed more expense. More expense means less profit. Whereas in the financial books, they showed a less expense, which means more profit. So now here also you should increase your profit. So add. Next, sir, loss due to obsolescence charged in the financial accounts. So loss due to obsolescence, it is only charged in the financial accounts, it seems. So what you should do, sir? When it is an expense charged only in financial accounts, financial profit, what happened, sir? Financial profit decreased. So when financial profit is decreased, what you should do to your cost profit, sir? This also you decrease, sir. Minus. Okay. Interest on investment not included in the cost accounts. There is some interest on investment, sir. That is not included in the cost accounts. In the financial books it is included, which means profit increased. In cost it is not increased. What you should do, sir? Add it to the profit, sir. Add it to the profit. Sir, stores adjustment, basically stock adjustment. Credit in the financial books, it seems. Credit means income. We showed some credit in the financial books, not shown in the cost books. Because of which what happened, sir? Cost book profit is less compared to financial books. So what you should do, sir? Increase the profit. Okay. Loss due to depreciation in stock value. There is a depreciation in stock value. That loss is recorded only in the financial books, sir. Okay. But not in the cost books. Great. So that loss would have reduced the financial profit. So financial profit is less compared to cost profit. So in cost also we should show it as a loss. When we show it as a loss, our profit should be reduced. So this is all about the first question. This is all about the first question. You should present it this way. See here in the answer I took it as the starting point as a financial accounting. You can take it as a cost records. If you take financial accounting as a starting point, answer everything will be ulta, right? because there we should see what happened to our financial books, what they have done in cost books, what they have done in cost book, that we should incorporate in our finance books. Done, sir. Next illustration. Next illustration, sir. Yes. The net profit shown by the financial accounts of the company amounted to rupees 18,550, whereas profit disclosed as per cost accounting is 28,660. On reconciling the figure, following differences were found. Okay. Prepare a statement reconciling the figure shown by the cost and financial accounts. Okay. Earlier we started with the cost books. Now let's start with the financial accounts. In this question we will deal with it in a financial accounting. Okay. Director's fees not charged in a cost account, sir. Director's fees not charged in a cost accounting. So here base book is which? Cost accounting. Starting point is which, sir? Financial accounting. So we should take a financial accounting to the cost accounting. Okay. Director fees is only charged in the finance book, sir. Okay. When the director's fees is charged in the finance book, what happened to the financing profit, sir? Profit decreased. Yes, sir. Cost accounting profit decreased. The answer is no. What you should do, sir? Add it back to the profit. Add it back. Because in cost, profit is as it is. But in finance, we showed some expense. It fell. So increase. Okay. Done. A provision for bad and doubtful debt. A provision for bad and doubtful debt. Of course, it won't be there in the cost accounting, but it is there only in the financial accounting. So what you should do, sir? What you should do, sir? Very simple. You showed there as an expense because of which your profit has been reduced. Now increase the profit to come in par with the cost accounting. Reverse what you have done. That's it. Bank interest, sir. You showed it as an income because of which your profit increased, but in cost accounting it is not recorded. Now you should decrease your income. Yes, sir. Income tax. You showed it as an expense in your finance book, sir. Okay. Because of which your profit decreased, sir. Okay. But in cost accounting profit nothing happened. So whenever you decreased, add it back so that you will come in par with the cost accounting. Overheads in the cost account is estimated 8,500. In the financial account it is 8,320. Over absorption. It is over absorption because in cost accounting we showed more expense. How much it is, sir? 180 over absorption. So how to deal with the over absorption, sir? In cost accounting we showed more expense means less profit. In financial accounting we showed a less expense, which means more profit. Now I'm bringing up financial account to the cost accounting. So what you should do, sir? You should reduce it from the profit. Show the more expense. If you want to show the more expense, it reduces the profit. Minus 180. Okay, sir. Done. Work was started during the year on a new factory and expenditure of 16,000 was incurred. Depreciation of 5% is provided in the financial accounts. So they are telling that, sir, listen, okay, listening, there is some new building, okay, new building or new project, new factory, something. 16,000 is a expenditure. Okay, sir, great. Let's say in dollars because 16,000 watt factory. Chalo. On that 5% depreciation is provided where, sir? In the books of accounts. How much it will come? 16,000, 1,600, 800. So around rupees 800 is shown only in the books of accounts, sir. Okay. 1,800 is shown as an expense in books of accounts. Because of which profit what happened, sir? Profit decreased. Profit decreased. Okay, sir. Where decreased? Financial account. Cost accounting, anything happened? Nothing has happened. So what you should do, sir? We are trying to reach at the cost profit. So cost book mein nothing we have done. But in our books, we did jatre by reducing it. Now add it back. Add 800. That's it. That's it. Simple. Just go through this for a minute. We'll proceed. Yes, sir. We'll proceed. Fourth one. Illustration 4. Measure Mysore Petro Limited showed a net loss. Nice. This is all question of loss. 2,08,000 as per the financial accounts. Cost accounting disclosed a loss of 1,64,000. Great. Following information is given. So they are asking you to prepare a reconciliation statement. Listen here, guys. As they have taken this question also in the financial accounting point of view as a starting point, I am also considering the same. Or we'll do one thing. They have taken financial loss as a starting point. I will show the cost loss as a starting point. So both the things will be taken care. Yes, sir. We'll do that. Fine. Cost loss is a starting point. Factory overhead under recovered, sir. Factory overhead under recovered means what we have done, sir. In our cost books, we showed a less expense. Okay, sir. We showed a less expense. So what? When we showed a less expense, as per our cost, loss is also less, sir. Yes. As per our cost, loss is also less. But as per our final accounts, financial accounts, we showed more expense. The answer is yes. More expense, more loss. Yes. So what you should do, sir? You should increase your loss by 3,000. Because you showed less expense, because of which less loss. So now increase 3,000. Okay. Increase 3,000 to 208 or 164, sir? 164,000, because our starting point is costing loss. Yes, sir. Admin overhead is over recovered, it seems, which means in your cost books you are showing a more expense. More expense means more loss, whereas in your financial accounting less loss. Reduce the loss. Ashtena? Ashte. All good? Yes, sir. Depreciation charged in the financial books is 60,000, sir. In cost books it is 65,000, sir. So 5,000 extra where in a cost book, sir. 5,000 extra means, sir, you showed more expense, less expense. More expense means more loss, less loss. More loss. So now what you should do, sir? Reduce the loss by 5,000. Reduce the loss by 5,000. Okay, sir. Done. Listen, guys, this chapter say question will be there in the examination for sure. That too, this is the examiner's favorite unit, reconciliation. So you have to prepare and go. Interest on investment is not included in cost. We have done some investment, for that we we got some interest, because of which in our financial books income means reduction in the loss, but in cost book so much only the loss. Now you should reduce the loss. Whatever they have done, we should do the same thing. Okay, sir, done. Income tax provided, sir. Income tax provided means only in the financial books. In financial books, increase in the loss, sir. Increase in the loss, sir. Cost book may nothing has happened, sir. Now here also you increase the loss, sir. Okay, sir. Transfer fees, sir. It is a income. It is not an expense. Remember, fees means don't consider straight away. Sir, it is a loss, no. Expense, no. It is a income. In financial book, we showed it as a income, sir. Okay. But in the cost book, we didn't show anything, sir. Great. When we showed it as an income in the finance book, what happened to the profit, sir? What happened to the loss, sir? Loss decreased because it's an income. So here also what you should do, sir? Decrease the loss. So, okay. Stores adjustment, sir, credited in the books, sir. When it is credited in the books, what happened to the loss as per the books? Reduced. Because credit side, no. Difference will be less. So it's reduced, sir. Reduced. So loss reduced. Here also you should reduce the loss. Ashte. Here in the books they have taken financial accounts as a base. Please consider accordingly and do. Whatever we have taken as a add, this here they should have taken it as a minus. See, this item. Factory overhead under recovery, interest, income, they would have taken it as a less. All other things we will take it as a add and we'll present it this way. Just take a screenshot of this. There is as per the financial accounts. Take a screenshot of this adjustment as per the cost accounts. Whatever happened to the base book of profit or loss, that's what we should do it in the normal books also. Our book also. Then done, sir, done. That's it, sir. That's it. Okay, fine. Chalo. We'll go to the next question. Illustration number 5. Here also they have taken it as a financial profit. We'll take it as a financial profit only. Sir, here we should take financial profit only, sir. Better, because they have given financial data. Fine. Shall we? Yes, sir. During a particular year, the auditor certified the financial accounts showing a profit of 168,000. Nice. You can see over here 168,000. Whereas cost is coming out to be 240,000. Nice. So cost profit is more. So 60 around 72,000 difference from where it is coming, that we should calculate. Okay. Chala. We'll see one by one. Yes, sir. Here the factory overhead is there, no, sir? Factory overhead. Whether this is actual or absorbed, sir? It is actual because it is a financial books. Admin expense, actual. Selling expense, actual. Okay, fine. Let's see one by one, sir, what we should do. Starting point is financial accounts. The costing records show the following. Book value of the closing stock as 780. In our financial books, we are showing it as 750. In costing, they are showing it as 780, which means closing stock in the cost book is more. More the closing stock, more the profit, because it is in the credit side. Or you can simply tell it as it is opposite side of your expense side, which means reduction in the expense. Reduction in the expense leads to more profit. So in the cost books, the profit we showed more. By how much, sir? 30,000. So in the financial books, what we should do, sir? We should also show more profit. How much, sir? Not 780,000 but 30,000. Because in our cost book, more the closing stock, more the profit. Financial books, that is not considered. Now consider it. Okay. Add it, sir. Done. Next. Factory overhead have been absorbed to the extent of 189,800. Sir, in our cost book, factory overhead is 189,800. In our cash book, 2,10,000, sir. So what is the difference, sir? Around 20,200. 20,200. Now my question is, under absorption or over absorption? Sir, of course under absorption. We paid 210, we absorbed 189,800. Due to the under absorption in the cost, what happened in the cost profit, sir? Cost profit decreased or increased. Cost profit increased because you are showing less expense. So when you showed a less expense, your cost profit increased. Yes, sir. Your book profit decreased. Yes, sir. Now we are trying to reach, I take our book profit to the cost profit. So add the profit. Because in cost books, cost is showed less. So profit is more. Here in the finance book, cost is showed more, because of which profit is less. Now add back to the profit so that it will come in par. Sundry income is not considered, sir. There is some sundry income, no, sundry income. That sundry income is not considered in the cost account, sir. Great. So what happens, sir? What happens? Very simple. In cost, profit is there as it is. Wherever is there, there only it's there. But in finance, by considering this as a sundry expense, we increased it. Because of considering it as sundry expense, we increased our profit. Now reduce it. Minus 5,000. Minus 5,000. Total absorption of direct wages is 246,000, sir. How much here, sir? 230. So over absorption, under absorption, over absorption. By how much, sir? 16,000. Over absorption means more cost in the cost books. More cost in the cost books means less profit in the cost books, but more profit in the financial accounts. Now what you should do, sir? Here also you should reduce your profit. Because you showed more profit than cost books. We are trying to reach at the cost book, so you should reduce it. Okay, sir. Done. Next what, sir? Administration expenses are covered. Administration expenses are covered at 3% of selling price. Sales is how much, sir? 34,65,000. Sales is how much, sir? 34,65,000. Okay. Into 3%. into 3%, which will come to 103,950. 103,950. This is my expense as per cost accounts. Whereas, how much I took over here? Here I took only 95,000. Here I took only 95,000. Under absorption, over absorption, sir? Over absorption. In costing, we showed more expense. So when we showed a more expense, how much we showed, sir? 8,950. We showed a more expense means less profit. Less profit means in book profit also we should reduce the profit. Over absorption of administration you should reduce. Selling price includes 5% of the selling expenses. So selling expense is there, no sir? Yes sir. That is how much, sir? 5% it seems. So sales is 34,65,000. Sales is 34,65,000. In that 5%, how much it will come, sir? It will come to around 173,250. It comes to around 173,250. Okay, sir. But in books, how much we are recording, sir? We are recording 225,000 under absorption, over absorption. Of course, over absorption. We are showing more in the, under absorption. Because in costing, we are showing only 173,250. In books, we are showing 225. Under absorption. So, under absorption, sir, in costing, we showed less cost, which means more profit. How much more profit, sir? 25 and 26 to 750. Around 51,750. 51,750, I am showing more profit in the cost, sir. So add 51,750. Ashte na sir, ashte. Just take a look at it. I am giving you people 2 minutes. Go through this in 2 minutes and we will proceed. Illustration number 6. Listen. A transistors manufacturer who commenced his business on 1st June supplies you with the following information and asks you to prepare a statement showing profit as per transistors sold. So he is asking you to calculate the profit per unit. Okay. Wages and material are to be charged at actual cost. Nice. Works overhead at 75% of wages. He is giving a absorption rates. That's it. Giving a absorption rate. And office overhead at a 30% of the works cost. Works cost means factory cost. Okay. Number of transistor manufactured and sold. Material per set so much. Wages per set so much. Selling price per set is so much. Actual expenditure is so much. Work expenditure 32,160. That is factory overhead. Administration overhead is 61,800. Okay. So what you should do, sir? First, we should prepare a cost statement. If you see this, you will die only, my handwriting. So, give me a second. I will show it from the study mat itself. Chalo. Let's prepare a cost statement quickly. Material cost, sir, per unit 240. So, 240 into how many units? 540, right? 540. So 240 into 540 will come to 129,600. Wages, sir, 80 into 540, which will come to 43,200. Okay, we'll get a prime cost. For that, add the factory overhead. Here, factory overhead, should we take actual or they have given absorption rate? They have given absorption rate. How much, sir? 75% of the wages. So what I should do, sir? Wages is 43,200 into 75%, which will come to 32,400. 32,400. Okay, sir. Done. We will get a factory cost. Then administration expense, sir. Administration expense actual is, see here. Your actual factory overhead is 32,160. Absorption is 32,400. Under absorption or over absorption, sir? Over absorption. By how much, sir? 260. Over absorption by 260. Keep this thing in mind. Because reconciliation ke liye it is required. Okay. Done. Next is what, sir? Works cost 205 200. They are telling how much is the works cost overhead is this one, sir. Factory administration overhead 30% of works cost, which will come to 61,560. But actually how much I spent, sir? 61,800. So under absorption, over absorption, sir. Under absorption. How much, sir? 61,800 is actual paid, but I absorbed only 61,560. Around again 240 it is. Yes, around 240. Nice. So we get so much. Profit is so much as per books, and this one. So now only two items I have to adjust, sir. Only two items I have to adjust. What are that, sir? Here also it is 240 only, no? Here also it is 240 only. Sorry. Here also it is 240 only. 240, 240. One is under absorption, one is over absorption. Before that we have to calculate the books profit. Books profit may actual will take. See, material we took, wages we took as it is. Works overhead we are taking. How much is actual? Sales we took. Office overhead we are taking. How much is actual? Net profit we got. So, sir, net profit is matching. So why you want to do the reconciliation? Net profit is matching because there is a error of compensating error is there. What is that, sir? One under absorption, one over absorption. So I take profit as per financial books. Under absorption is there, sir. Under absorption means what, sir? In financial books more expense, in the costing books less expense, because of which costing profit will be more. So you should add it to the finance profit to arrive at it. So add the under recovery. Okay. Over recovery means what, sir? In cost books more expense, finance books less expense, which means cost book may profit is less, in finance book you should less. 240, 240, we end up getting so much. Yes, sir. Seventh one, kindly go through it quickly. Guys, seventh one is similar. Homework. Eighth one, homework, nothing special. Ninth one we will see. Because they are asking memorandum reconciliation account, not memorandum statement. Memorandum reconciliation accounts. Okay. See, as per books the profit is 126,400. As per books the profit is 126,400. So if you start with this number, we'll do one thing. We'll start with this profit only. Okay. We are starting with financial accounting profit. Okay, sir. Done. Let's see what and all is happening over here. One by one. Listen. The cost accounting of a concern showed a net profit is so much. It is seen that cost, profit and loss account is arrived on the basis of figures of furnished below. Opening stock they are telling 90,800. As per which one, sir? As per cost accounts. As per our financial accounts, how much it is, sir? Opening stock, it is 25,000, 40,000, 12,500. 25, 65, 77,500. As per books, 77,500. As per cost records, 90,800. Opening stock increases the profit, decreases the profit. Opening stock decreases the profit because it's an expense for the period. Okay, sir. So how much extra we showed in the cost account, sir? Opening stock. In cost account, extra we showed is around 12,500, 13,300. We showed 13,300 extra. We showed 13,300 extra expense in the cost accounts. Extra expense in the cost account means, sir, profit in the cost account is lesser. So here what you should do, sir? Lesser. Because we started with the FAP, that is financial accounting profit. Sir, they asked the memorandum reconciliation account, no? Yeah. So less means what I told, profit will be there in the credit side. Reduction in the profit means debit side. So you should debit it. Okay, sir. Done. Debited. Next what, sir? Closing stock, as per our cost it is 69,500, as per our books it is 30, 15, 20, 700, which will come to 45,000, 45,700, 65,700, right? 65,700. So closing stock is more where, sir? Closing stock is more in the cost accounts. How much, sir? 3,800, right? 3,800. Okay, sir, 3,800 more we are showing. More means more profit, less profit. Of course, more profit. More profit in the cost account. What we should do to the profit in the financial account, sir? Increase. Add. Add means debit, credit, sir? Credit. Because we are started with the credit side. Okay. Admin expense not considered in the cost accounting. Cost accounting, this whole administration expense itself is not considered. It seems nice, no? So administration expense, what you are doing, sir? Very simple, people. Very simple. You showed it as an expense, but is not actually expense as per cost accounting. So what you should do, sir? You should add it back to the profit because it's not an expense. So add it to the profit. Add means debit, credit, sir? Credit. Credit. Okay. Now only so much, no, sir? Wait. See here. Selling expense, anyhow they are not talking anything. Leave these anyhow. Direct. So leaving that. There is a bad debt. Bad debt of course won't be there in the cost accounting because it's a pure financial items. So when it is a pure financial item, sir, we consider it as an expense in the financial accounts, but it is not an expense as per cost accounts. So cost account profit will be more than this. So you should increase this profit. Increase means credit, debit, sir? Credit. Okay, done. Miscellaneous revenue is there, that is not there in the cost sheet. So what you should do, sir? Very simple. Very simple. You showed it as an income because of which your profit increased, but cost profit, it is not increased. So what you should do, sir? You should reduce it. So you are matching with the cost profit. So reduce means debit, sir. That's it, sir. That's it. See here. Started with the financial profit, added the overvaluation of closing stock because it increases the profit, added the bad debt because that is not an actual expense as per the cost books. Again, administration, same reason. Whereas here, overvaluation of opening stock reduces the profit, so I reduced it. Miscellaneous revenue not considered, so I reduced it because it is not taken in the cost book, only taken in the finance book. Finance book profit increase, so now you should decrease. We arrive at a profit as per cost accounts. Astenas or Aste. That's it. Chalo. Illustration 10, people. Same what we discussed, same way it is. But here, see here, material consumption also will come. Because here material consumption is 56 as per cost, as per finance it is 50. So here it is here I will take 50 only, which means I showed a less expense. So for this I should reduce my profit because I showed a less expense like this. So I should prepare a cost sheet, I should prepare a P&L as per finance, and I should arrive at the answers. 11 is also same, so homework. So here our reconciliation gets over. Khatam, tata, bye bye. Hope you people understood. Yes, if you people understood, we have a YouTube channel called ArivuPro Academy. Please subscribe for it. So yes, we'll meet in the next lectures. So till then, take care. Bye bye.